Hey everyone, Microsoft had an overall excellent year in 2023 so far. The stock price is up 54%, and Microsoft investments in OpenAI and ChatGPT are paying off handsomely. So, is the stock a buy for 2024? Or has the stock price gone up too much already and the stock too expensive? Well, I'm going to answer that question in this video here, and you might be surprised to hear my answer. I think you might be surprised to hear my answer. So let's look at how Microsoft is doing most recently, and then let's take a longer term picture of Microsoft, and finally let's look at its valuation to come up with the answer of whether or not I think if Microsoft stock is a buy for 2024.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Microsoft, in its latest quarter, which they reported on October 24th, they said revenue increased by 13% to 56.5 billion, while operating income jumped by 25% to 26.9 billion. Solid increases on the top and bottom line, to be sure. Now, the key here is not only that, but also the computing segment turned around. Revenue growth in the computing segment, 4 or 5%. I mean, it wasn't incredible growth in that segment, but previous quarters, that segment had struggled. Remember, people bought computers in 2020 and 2021 more than they usually would have because people working and learning from home, households used to be able to get by with one computer per household, but that no longer was true in 2020 and 2021. You needed one computer per individual in the household because people were using it almost the entire day. So you couldn't get by with just one. And so that increase in computer sales in 2020 and 2021 created a bit of a vacuum, a gap now that people don't need new computers, right? Computers last 4 to 6 years. And so for that reason, the lack of computer sales was hurting Microsoft, which depends on that, which depends on computer sales for its sales of its Windows licensing, its Microsoft 365, its Microsoft Word, and sales of its productivity suite. The core of its business really relies on increasing computer sales. So it's important for Microsoft that it turned around in its most recent quarter, showing solid, although small, growth. At least the declines are over with, and that's what it seems now. And going forward, it can be strong as the people who bought computers in 2020 and 2021, they're going to start needing to replace them, towards the end of 2024, starting 2025. There's going to be a big replacement cycle that happens when those computers need to be upgraded. So now let's look at Microsoft's outlook for the next quarter and for the full year 2024. Management noting that revenue in the productivity and business segment to come in around 19 billion, in the intelligent cloud about 15 billion, and personal computing about 17 billion. All in all, there's going to be about 3 to 5 billion in revenue growth in the next quarter compared with the current quarter where they reported 56.5 billion in revenue. All in all, this is going to be about a little over 60 billion in revenue, so a several billion quarterly incremental revenue growth. That's solid. Management also noting that operating margins are expected to remain flat year over year, inclusive of the net impact from the Activision acquisition. That's good news also. Typically, the first year or two, sometimes three even, after a major acquisition, margins are smaller as you digest, as you incorporate the new company into your own operations. But Microsoft saying that's not going to be the case. And Microsoft has had experience with major acquisitions. And so you can be reasonably confident that what management says is likely to happen. And Microsoft already has excellent operating profit margins, which I'm going to show you in a little bit. So you stay tuned for that. And so keeping the margins where they are is excellent news for investors looking at Microsoft stock. Longer term, Microsoft has demonstrated nice revenue growth, and it could be said to be excellent revenue growth from a little over 80 billion in 2014 all the way up to 218 billion in the most recent updated trailing 12-month period. Now, this includes acquisitions like LinkedIn, and going forward, it's going to include the recent acquisition of Activision. But still, organically, the company has demonstrated it can grow demand for its products and services. It's got a strong market share in the personal computing market for a long time, and it's going to be hard for any competitor to encroach on that market share. Now, Microsoft does not offer a strong dividend yield of just 0.76%, although it does offer a dividend yield, but more importantly, Microsoft investors can look forward to capital appreciation, the stock price to increase, and not invest in Microsoft just for the dividend yield. But for those that only invest in dividend stocks, Microsoft does have a dividend, and so you could check that off the box. If you're looking for only stocks that pay a dividend, Microsoft does have one, even though it is a modest dividend yield. I mentioned we would look at Microsoft's excellent profit margin, and here you have it, 43% operating profit margin over the trailing 12 months. That has done a nice job rising ever since bottoming out around 27% in 2016, which is still an excellent profit margin. Many businesses in the world would envy Microsoft at a profit margin of 27%, but it's done way better than that, growing it all the way up to 43% operating profit margin, which for a company that generates over 200 billion in annual revenue is phenomenal, and it's moving higher. And maybe the next year will be flat, as management says, but after they fully incorporate the acquisition, you can be reasonably confident that Microsoft could move this operating profit margin steadily higher. There isn't too much room to go higher. It's already extremely strong, but it could move steadily higher given that the company generates a strong majority of its revenue from services, and services tend to be more profitable overall because you're not selling anything physical that requires tangible expense. You're selling services which, after you spend the money to create, then it delivers great economies in scale because more and more people buy it. Each incremental sale adds to the bottom line. It's a lucrative business model if you can get it to large scale, which Microsoft has done, and now it's reaping the benefits of those investments. Also impressive is Microsoft cash flow from operations to sales over the trailing 12 months of 43.5%. This too has been rising since 2014, and the company has done a good job converting sales into cash flow. And you think about that 200 billion in revenue trailing 12 months, 43% of that turns into cash flow from operations. That's over $80 billion every year Microsoft is generating cash flow. That's really, really good, and that's attractive. That's some of the best margins I've seen in many of the companies that I follow. And finally, let's look at valuation, because yes, all of those statistics were phenomenal, but as I often say, things can look great, but if it's too expensive, then you're left saying, well, yeah, that's wonderful, but it's too expensive for me. Kind of like when you go into a dealership, you look at a Mercedes-Benz and everything looks great, and then you look at the price tag at $146,000, and you might say, yeah, that's awesome, but too expensive for me. I don't want to pay that price for all of those premium features. And so that's why it's important to also look at valuation after you look at all the features and characteristics of a company. And Microsoft is trading at a forward price to earnings of 28.69. You can see it's about the average valuation it's traded for going back to January of 2021. It's been cheaper, right? It's gone all the way down to close to forward PE of 20, but it's been more expensive at a forward PE of around 36. So it's about in the middle. It's about fairly priced. And considering its excellent performance, and I haven't talked too much about artificial intelligence and how Microsoft is incorporating AI into its products, which is going to make them even more sought after and generate incrementally more revenue. Given those excellent prospects and a fair valuation, I think Microsoft stock is a buy for 2024. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.